Good afternoon, welcome. It is December the 22nd, 3 days before Christmas, or two more sleeps, really, right? Or was it two? So today I have Meta Johnny here again, our resident man coming to us from the metaverse, and Alex from Markets for Mayhem. So we're going to have a good discussion we usually do about what happened with the charts, a quick overview of that, the US indices, a breakup of them, and of course oil and natural gas. So starting off today, pretty well continued as we've expected. We talked about overnight, and this morning we had another strong day from the Nasdaq up. It was the leader, up over 1%. The S&P was up just over 1%, and the Dow was up just under at 0.74. The standout again today was the Russell, up 2.7%. So that's up nearly 6% in two sessions. It had a lot of ground to cover, and of course that was heavily oversold. Our assumption is a lot of that to do is with tax selling, so that got overdone, given that tends to hold the more speculative ends of the market. As far as the treasuries today, a much quieter day than yesterday. Yesterday, remember, we had that really A-grade 20-year auction. So today, and after that, we had the move in yields, and the currencies had a little effect. So just remember, from the Forex world, spot is Christmas Eve now. So currencies are really winding down. It's just going to be your little guy on the desk there. So as far as treasuries did, the 10-year yield fell 3 basis points, and that would equate to a yield of 1.46%. As far as oil goes, we'll talk that in more depth later. Another stellar day. It was an EIA report today, a bigger draw, and production lower. And actually, if you can see on our side there, the SBR is now at, I think the low is 2002. So, and that's only the first withdrawal out of Biden's policy. That was last Friday, just gone. So that's back at last week's high, 72.77. Natural gas had a pretty volatile day. It was over $2 for two. How about $4 for most of the day? So let's go through the charts real quick. We'll start off with S&P. Here's the hourly that's going to show it better. We have just been, since that beautiful buy down here, that positive divergence just short of 08, we have pretty well marched high. And look where we closed. That was our target, if you remember this morning, a retest of that channel. That's right where we closed today. And that's a full measured move. That's a Murray Math move with that, right? And we can see, for as far as Ichimoku rules, look at this kiss alike right here. We've never looked back. We never got back down to the Cajun. This is hourly, which is a good thing, but the channel here, and if for those that follow Babson and median line, that's perfect. If we go to our daily, and I do harp on about this, just because it keeps it easy, the daily Tankin line, it's been the power. When it got above that yesterday, it closed in at Alex like 3 handles above it, I think, yesterday. And so we never really threatened that. We had lots of energy, and look where we are, right? And it sounds kind of silly, but we are not too far off the all-time high, right? This was fear and gloom, the end of the world. Russia was attacking, China's attacking, we're all going to die from Omicron, et cetera, the world's shutting down, and here we are. So the difference was this was a steady climb, and you can see there was, whilst we're here in the index, a lot of companies did get in that manic kind of move in trading rooms, particularly the small caps, but a lot didn't. So, Alex is going to talk about that in a bit, but the depth of the breadth was a lot stronger than what it looks like. Just looking at that, yes. 5 minutes, look at that, nice and steady. We had this one steady buying opportunity, and we pretty well went up all day on that. Now, let's just look quickly at the major indexes almost identical in Nasdaq, except for this, it never really sold off, right? And you can
Yeah.
see off the 50 here, nice little retest of the Tankin. And again, as of yesterday, remember I was very bullish because on the S&P, the Cajun was being supported, but the Chicow was nowhere near overbought. And we're still a little bit here on Nasdaq, but on SPOOs, all orderly. And Alex made a comment on Twitter last night that he would prefer it not to ramp up yesterday, overnight, sorry, and nice and steady. And that's the reason why. It gives you strength, right? And gives you more depth or construction to the rally. On the Russell, look what we've come back to, guys. This is that
Pretty impressive.
breakdown. This is the end of the world. This is the end of the solar system. This is the sun going to crash Earth. I mean, all jokes aside, what we really noticed was this, I put the daily up again. This was its line in the sand since way back
Right.
here, right? And it held it up again. So that was really perfect. And the Cajun is your obvious target. The difference here, which made this a good buy for those in Ichimoku, you had a flat cloud. The shape of the cloud is what's relevant, not whether you're in it, below it, or under it. They're all parts of it. But the trick to a lot of this, it's esoteric, is those little nuances of it. And that's one of them. And so it acts like, just think of it logically, it acts like a magnet. And that's what's pulling that up. And of course, the Apple, which I like to trade the heck out of. And this is a good, I'll spend a little bit, we filled that gap, we came back, retested, and we dribbled up. The big thing with this one, and this is a 60-minute chart, so you can see what it did Ichimoku-wise. This is why you use Murray math and just understand the Elliott. This is a rising wedge, is what everyone will tell you. But it's a little bit more than that because we're coming off 1, 2, 3. So this is either a 4. The trouble is we're already in the 2. So that's a more bullish pattern. But here's what I noticed today. So the way I traded this, as I was saying yesterday, is I went home. I bought a strip down here at calls across the curve, but short dated. Meaning this year and, to expire on the 31st. What happened, and usually the reason I like Apple is usually got low vol, right? That's why we were able to make a lot of it a few weeks ago, if you remember that play. But it was high vol, and I bought just out of the money in some of those calls, like 77s and a halves, and as well as 75s. What I noticed, vol collapsed today on this more than
It really did.
Yeah, and particularly on these sort of names, right? I guarantee if I went to the Robloxes and all that, it was probably similar. So this was a day we actually made more money long the stock rather than long the options because vol fell so much. So that's the difficulty of trading calls long, buying them in a big sell-off because the vol's so high because of the put side of it, right? So, interesting thing. So the way I will trade that, if I want to go long tomorrow, vol should be lower if we're still in a bull situation. And it's better to buy the option the next day. So just a point on that. And then I guess we'll look at the 4-hour there. And you can see more constructive from an Ichimoku point of view. Bottom of the cloud, we went right to the top. And look what's holding it, the 50. This is the other reason I took profit on Apple. We're testing that 50, which was the breakdown level. So, and remember, I tend to trade more than when I'm in investment mode is when I believe it's a wave 3 or a C wave where the power is. So, before we talk about the other markets, I just want to bring Alex on to talk about the depth. Just one quick thing. I tend to be on the boring side, so I just on the 11 sectors of the SPOOs, all 11 of them were up today. So significant the breadth there, and Alex is going to talk more about that breadth.
Yeah, so first I want to thank everyone for joining us on the live stream. And if you're watching this later on, thanks for watching. This is myself. I'm Alex, Markets and Mayhem, and I'm joined with Traders Community here, who also operates NovaWave. Both accounts on Twitter, TradersCom and NovaWave, are great follows, so I suggest you check them out. And if you like the stream, please like and subscribe to his YouTube channel. So without further ado, yesterday and today, breadth was better than we've seen for a little while. Yesterday was obviously quite a bit better than today, but today was still encouraging, and we had a kind of risk-on mood throughout the market. So I'm going to break it down a couple different ways, and then I'll give you my take. First, Nasdaq advancing versus declining issues at the close, about 26 to 18. NYSE 20 to 8. So a lot more advancers and decliners. It's exactly what you want to see, especially after that push off the lows yesterday that we had, and really starting this week off on Monday, we kind of had a recovery midday. So we've been continuing that, but we were able to breathe out a little bit overnight and into this morning, which is as Andrew said, that was something I was looking for. I didn't want to just gap up into the open and get faded all day. I wanted to see some selling. I wanted to see a little bit of nervousness, maybe the tree shaking just a little bit, and I think we got just that in the start of the day. And it wasn't until about maybe 10:30, 11 that we really started to see more constructive price action across all four major indices. So drilling down into the sectors, the most well bid sectors were things like junior gold miners, home construction, consumer discretionaries, which is really just an ETF of Amazon and Tesla and a couple other names, U.S. medical devices, junior silver miners, metals and mining. So you see a theme here, tech, semis, and infrastructure. So all those were bid pretty well on the laggard side, and there wasn't a red sector to be found, but there were some that didn't really perform. The least performing, and yesterday it had a pretty good day, so maybe that makes sense. But biotechs were on the low end of the list. Retail was pretty flat, even after that good consumer sentiment number, which I thought was interesting. And industrials were pretty flat on the day, and telecoms were pretty flat on the day outside of the Death Star of AT&T. Under factors, we have Russell 1000 growth, S&P 400 mid-cap growth, Russell 2000 small-cap value, and then mid-cap value really leading the way higher. And the laggards weren't lagging too much, but on the lower end, we had Russell 1000 value and low volatility. So you can see the higher beta stuff, the growthier stuff, and the small caps were bid a little bit better. And then the sort of flight to safety, where you could see it both in factors and sectors, wasn't quite as attractive today. So one other area I want to just talk about is, we had the 5-year auction today. It was a pretty decent auction. Didn't really move the bond auction or the bond market too much. So, real rates today across the entire curve came down. And that's kind of supportive to a lot of these other longer duration, higher beta risk assets. So, we could potentially see a better bid in some of the more speculative areas of the market, whether it be growth or tech. The less developed tech companies, whether it's crypto, which Metajani will talk about a little bit, or whether it's things even like precious metals. And we saw a pretty strong bid in silver and gold and, of course, the miners. So, overall, I think it was a pretty constructive day. It was encouraging to see continuation from yesterday's move. It was encouraging to see some of the levels that the S&P was able to climb above, as well as the Nasdaq. The Russell looks better than it did. It was able to break above this sort of descending wedge trend line, this sort of descending trend line. It broke above it today. I was talking about that yesterday on my feed. So it seems like the small caps have a decent bid, going into this, but we're also at a pretty significant level of potential resistance to watch. So overall, risk on, things look pretty good, and looking for some more continuation of this moving forward to really validate that the worst might be behind us short term.
Nicely said, Alex. And just before joining, I just wanted to touch on one of the big sectors today was the home builders, and part of that, or a little bit of the, obviously was going with risk on, but today we had the existing home sales come out positive. They were lower than what was expected, but really, do these analysts have any clue? But what was interesting in it was the supply curve is actually improving. I know we hear every 5 minutes that we don't have any money, or we have no supplies. Well, reading through this, you can see that we've had a steady rise and demand. Now, the reason houses are so important, obviously, is it's such a backbone of it's the consumer and houses. And the great thing that I think, perhaps they don't like it in Wall Street, well, they don't live in the real world, right? but they prefer everyone to be buying just consumables, wasteful assets. Most Americans now are either investing in homes or saving, two big things. And we see that in the stock market as well, what they're buying and what they're not. There isn't a panic, which is impressive, right? On the rubbish, obviously, but not in the quality. But sales were up across the board in every part of America. And so that helped the basically the economy. It's a strong thing, but it's also helped the home builders. So you can go through and read more on the website. I just wanted to touch on that before Johnny came on and spoke all things Bitcoin. Here we go. Let me bring a chart up for you, Johnny. There you go. That's what you wanted to talk about, the weekly, I understand. There we go.
Yes. Can you hear me?
Yep, hear you perfectly.
Okay, guys. I'm sorry about that. I didn't know if I was cued in. Welcome, everybody. This is Johnny wanting to give you an update real quick on Bitcoin and what's happening with the market right now a little bit. The Bitcoin price is hovering around the $49,000 mark right now. It's up from 46. It's having a hard time breaking that $50,000 price point that everybody's trying to see if it could actually get there and hold it. It's tried several times, but it hasn't been able to do that. It's been slipping back. But the good thing is we're following the 140-day market realized gradient delta, which means the same time period before, 146 months ago. So you want to look back. It is following the same pattern. And this is an indication that it's forming a bottom right now where we're going to get a bounce. And people are real excited right now that we're going to have a happy and very red Christmas, or very good Christmas with the
green Christmas, don't we?
Green Christmas, yeah, the green Christmas and everything that comes with that. But the other indicators out there, the miners are buying more and more mining equipment. They've got one miner that's out there. He's bought up it's called TeraWolf. They bought 15,000 rigs. So people are gearing up for a very hot end of the year and beginning of 2022. And that leads me to a couple of things I'm going to talk about in the coming year, more about the metaverse and how that plays in. I'm just going to give you a little bit of something to chew on till then. Right now, to keep your eye on Matic. Matic is very similar to Ethereum, and it's forming a very similar pattern as Ethereum did before it started taking off and became one of the second most used and visible platforms out there. And then you've got Shiba Inu right now. You want to take a look at that. Somebody came in and a single wallet purchased $134 million worth of Shiba Inu. So that's going to give everybody a balance that has Shiba Inu. And we'll once again get more into the metaverse and how this plays into some of the things that I just talked about. Bitcoin does tend to help everything, and this balance that's happening right now is bringing up other altcoins. So this whole thing is coming together nicely. And just like with Alex and the gold miners, everybody in the crypto market is looking forward to a happy end of the year. So guys.
So I got one quick question on that. What is Elon Musk going to tweet about with regard to it? Isn't he the main mover of all this?
So the single wallet that bought is somebody that's anonymous. So people are thinking maybe Elon.
Oh, really? Interesting. Yeah. Interesting. Well, thanks for that, Johnny. Well, we're just a little bit on Bitcoin. I left the weekly chart up there. It actually trades very clinically, technically. But one thing of note, so I don't actually trade this. I tend to want to sleep at night, but it does trade perfectly off. If you look at the Murray math on it, it counts it perfect. And the reason I'm time and price, I want to have an idea where it's going to be in the future, because this move was 26 or 29% in one session. So you need to be short before it, and you need to have a target if you're going to trade it. And no, that was more, I think. This one was at 26%. But you can see what it moved off. Perfectly a measured move off Murray math right to that 50. And what's significant with this, in really speculative moves, when you blast through Tankin or Cajun, it's got more to go. And you saw that on that move for the S&P right after Powell spoke in reverse. Remember, it just plowed through them. So usually means it's a rinse, and lo and behold, on the S&P it did, right? Then it had that 3 days of selling, and it's gone back up. This time it went up orderly. So before we talk a little bit about more tomorrow, let's go through oil real quickly. We had the EIA report today, and that's all on the website if you want to look at it. The details, there was a much bigger draw, and we talked about SPR. It was a big build on oil, but that's expected this time of year. Those that are new to oil, remember there's a lot of taxation games go on for this, and it'll be the same in next week. So technically, we spoke about that. It was a perfect bottom down here, and we've been building this pennant. We had that ABC, and we came back inside here. Remember, and I like to compare this to Keltner bands. You don't see this very often in Ichimoku, but it did open up the same as Bollinger or Keltner, if you're familiar with that. And the key is it came back into it. Usually that should keep trending down, right? Or trending up, depend which way you go. So that's very bullish. Should it get above here? I would like this to be flatter, but we do see that opening up, which spoke about this morning, and that helped work as a magnet. That's our daily, which hedges are pretty well going to look at, not so much speculators. And look where we are hourly. This is very similar to everything else we looked at, right?
Oh, what a move.
Yeah, quite the move, and it's moving as a risk asset right now. That's also because most oil people have shut down desks. They have all the hedges in place. Remember, we got the tax element. So unless they got something to do that they weren't planning on, that's going to input it. Now, here's that high. Look at that, just above it, and we closed above it. And finally on oil, so these are your levels. So you know all those levels that we've been watching. We didn't even get to the pivot, and we worked our way up very steadily off the tank. And you could have just traded that all day off the tanker. You had one hiccup here, but that was under the 50, so you wouldn't have been long anyway. And that was under 8H. You didn't get long really until it got back over here. And that was also over this high. And it was a nice just motor up all day. Got to R1. Did a little bit of work there, but just continued higher. So pretty simple. We had EIA out of the way. We have EIA tomorrow for natural gas. We filled that gap the other day. We had a positive divergence here. And we've had now 3 days where we didn't just sell off. So that's meaningful. We have the EIA tomorrow, but unless that's a much bigger draw than expected, there won't be much from that. It's all going to be about weather. I think it was actually a real easy sell today because it came up on the European weather that it does, as I've said many times. We are a domestic currency, but LNG is relevant, but you can only get so much LNG out, right? It's not like oil.
Right.
So the storage element. And here's a look at that on the 10-minute. You can see right around tanking. So that's that little gap I was talking about. And it just came off that. So again, if you don't trade natural gas it's not one to speculate all the time. A lot of the time I don't actually trade it. It goes sideways. There's massive optionality out in that position. I think those that are new to it, you'll be shocked at how big the bigger guys do play in natural gas. There's a few guys I know do 10,000 lots at a time in the OTC on that. Similar on oil. We were talking about Apple before. There's a number of guys I know that swing around 100,000 shares. So it's not what many people think on Twitterverse. And they're not doing it to manipulate. They're coming out the curve. They're part of funds. And the reason they're in those is because they're liquid, right? It's not to bosh it around. The manipulation you see in that, we saw in Apple, was 6 days of back-to-back upgrades. But was it manipulation, or did they just miss the curve? Because we were talking earlier.
Well, let's also Let's
You know,
also not forget that there was all sorts of manufactured negative news to try to push the price lower, and then there was all sorts of sort of narrative creation for positive news. So it was really coming from both sides with Apple.
right. I mean, that's fairly regular in all these markets, isn't it?
Yes, yes, it
I
really is.
mean, sad but true. Sad but true. Let's put
Speaking
levers
of
up while we're.
events,
Sorry, mate.
I was going to say, speaking of events, I wanted to just go over a couple of things that caught my eye today in the headlines. One thing that was interesting was U.S. stocks have beat the rest of the world's stock market by the most ever in the last 2 decades. The S&P surged 25% year to date, compared with a 3% gain from the MSCI All Country World X US Index. So without the United States, world stocks are only up 3% year to date. That's pretty remarkable. I know China's dragging that stat down because they're pretty heavily weighted, but that is still pretty remarkable stuff. Another thing that's interesting is, a lot of people are starting to show some, concern about where central banks are in their hiking cycle. Some say that they're behind. Others say they're, maybe at the curve. But the consensus seems to be growing, at least for some of these global central banks, that perhaps they are further behind the curve than people think. And that's something that's going to get some more discussion as we get into 2022. If anyone out there was relying on anything that touches the Amazon AWS web services today or several times over the last few weeks, you may have noticed some outages. This would include services today like Slack, Imager, Epic Games. They were down for many users, and this is the third time in just a couple weeks that Amazon has had some big problems. Today it was blamed on a power outage, which, quite frankly, in a data center setting shouldn't happen because there should be multiple levels of redundancy at the computer level, at the infrastructure level, at the level of generation. So if you have an outage from your provider, you have a generator, you have batteries. I mean, so this kind of stuff it shouldn't happen. Let's hope that it's an anomaly. In the world of cybersecurity, I think it's very interesting to note that state-based hacking continues to rise. We just saw a headline now that the North Korean army of hackers is aggressively stepping up their activities, and in part to try to preserve Kim Jong-un's reign of terror. So we can expect that the cybersecurity sector is going to get a stronger amount of attention from investors, because this is a part of the the technology industry that, just as a sector, has an 18% CAGR, or compound annual growth rate. And then you drill down to things like endpoint detection and response. That's got closer to a 24% CAGR. That's things like, CrowdStrike, SentinelOne, some of the other smaller players play in that space. But nevertheless, when you see this kind of threatscape, people are going to invest more in cybersecurity. And then some good news on the Omicron front. South Africa's top infectious disease scientist has said that they expect that they are past the peak. And that it is indeed more mild than some had potentially thought it could be, and he expects other countries will follow the same trajectory. That really the worst should be behind us soon. So if that ends up being true, that would be great news for everyone, not just the markets, but for humanity as a whole. And then one last thing, this headline really kind of had my head spinning. I mean, we've seen this coming for a long time, but TikTok has overtaken Google to become the most popular website on the planet. It also overtook other U.S. tech behemoths that ranked above it last year, including Amazon, Apple, Facebook, Microsoft, and Netflix. So just imagine how this app kind of came out of left field. It's catered very well to the Gen Z and millennial audience. There's not a lot of other stuff exactly like it. Other services kind of try to mimic it, but haven't done a great job. But, TikTok is now the most popular website on the planet. So obviously that's a catalyst for their ad revenue, for people who are trying to be a component of the creator economy. That becomes more enticing to have a presence on TikTok.
Yeah, that's the other thing I get out of that, one, I guess we're getting old, but secondly, it just shows you how quickly things can change in the technology
Yes.
world, right? So without further ado, Madavi, who's been busy trading, he's predominantly a stock trader and Nasdaq futures trader. Let me bring up Nasdaq Chart again. He was trading some aftermarket stuff, but he's going to join us now. Welcome, Madavi.
How you doing?
Good.
Hey,
Good.
Robbie.
Let me bring up a Nasdaq chart for you. We went, as in, all I traded today was, well, you know what it was, S&P and Apple pretty much, and oil. So if you want to walk, you did some really good shorts today. You were
Yeah.
sharing with us. Do you want to go through those?
I was staying along the NQs most of the time, actually the whole day, except for one little fake out. I got short and ended up losing money. And then I went back long again on the NQs, but I wasn't really trading too heavy the future today because they didn't really do much. But besides a couple moves here and there, but it went straight up. So it was a good thing, just buy and hold it, and that's what I did for the most part. And then I did last night, early mornings. There was a company coming out with their trials, and it's called ALLK. And this guy knew he was in it, so he made me aware of it. And it came out, and it didn't do so well. So if you want to know what a high flying stock look in matters of days, it takes years to go up, maybe a year to go up. But see what it does in a day. Just go check out symbol A is an apple, L love kitty. K.
Yeah,
that thing went down 90%. It was down 89.87% or $75 on the day. And if you take this thing out to a weekly or a monthly chart, you'll see this is an all-time low for the stock. So pretty much a wipeout here.
Yeah.
There we go. There's a chart up of it there for you.
Oh, there you go. Thank you, mate.
Just a disaster.
So I guess if you loved it at $80, you adore it down here, right? So, but that's a good reminder of what can go wrong. I mean, I'm kind of known for hating by it being long. Every time I finally buy one, I either get out of it too early or too late. So I prefer to short them, and it's mainly to avert these horror stories, even when they're way up. I mean, it depends what they are, right? But
you got to remember, these kind of companies, I don't know what the hell, I forgot what this company was. It wasn't one of these biotech medicine companies. Well, their medicine didn't work with too well.
No. And the other thing, when they do get approved, if you probably notice, they gap up and then they come down because they then need the money, so they do a secondary. Obviously, the Modernas, life-altering thing like coronavirus, getting a ton of money from the government, etc., is a different situation. And then they become a short squeeze candidate. But here's a great example of when it all goes wrong, right? So diversification, if you're an investor, that's for sure. Well,
these things work. Most of these companies don't ever go out to produce it. As soon as they get the drug, it works, they sell it, because like Moderna and them, that's a one-off because the government really helped them out at NVAX.
Right.
NVAX it came down real quick after the market. That had news I was trading out also. Then I bought it and it went back up. I guess is their booster. Your booster is getting their efficacy and stuff's coming out.
Well, I noticed Moderna needed a boost. That's for sure.
Yeah. So if you go look at NVAX, I mean, look at. I bought that thing at. I still have a little bit left of it, but I bought it at 175. It was down to 168.
Who needs NVAX? Let me see.
NVAX.
Yeah, I think I put it in wrong.
And then I had this other stock that I've been trying to hold for a couple of days, thinking it got put into the Russell, It's called SOPA. And, this thing looked strong. I thought it was going to pop. But, man, in a pre-market, it would run up. And then during the market, it would just go down. And basically, pretty down a little bit because I kept on adding to it. And I got myself in trouble, But good thing I had this ALLK kind of balanced scales a little bit, let's just say.
Right. I mean, that's the thing. A lot of people, you got to remember, we don't always make money. It's controlling that risk, right? So
I let that thing a little bit get above my risk tolerance, but and I got out a little bit of it, but then it popped. I went all the way to $18. So, what I thought it was going to do yesterday, and I've been waiting for it, and it did finally do it. So it's when if you look at this stock, look at a chart of this stock, mate. This is another one that's
I
Crazy.
got NVAX up. Which one?
SOPA. Look at it like a yearly in that thing. Look at the highs and
For
look at the
some
lows.
reason, yeah. I mean, Sierra Chart's fixing it, but the yearlies for certain stocks, I don't know what they did on their code, but we can get the 4 hour. It's SOPA, right? SOPA.
I mean, this stock is like, you don't know where the hell this thing could go. Look at that thing. Look at it all the way to the end of it. Look how high that was. The other side. The other way.
Yeah. Hang on. Wow, that did come back.
Yeah.
Wow.
Look,
Wow.
Again, another. This is a biotech, right?
Yep.
By no
No, this
doubt.
is technology. This is software. This is software.
Oh.
So it's another sector where when things go wrong, the wheels can totally fall off the cart.
So this is software. I want to show you what can also happen in software. It's a Malaysian. It's kind of like an Uber or a food thing. It does food services or whatever. But it was interesting. I knew if it got this thing got look in the shares it has on it, the float it has on it, and I knew that once in the Russell, people would have to buy it, and with the amount of float in there, this thing would have to go up. But just 2 days ago, it was at a $3 stock.
Right, and so that's so in that sort of thing, technical analysis really doesn't mean too much. It's all order flow. So it's horses for courses. That's why it's important to not be all fundamental or all technical analysis. It's good to have them all in your toolbox, right? Obviously we're technical analysis people, but there's time where it's not the main thing, and I tend to look at esoteric. But that's a good example. So Madavi's just really good at reading the tape. Who's a famous guy from that from the 20s?
It's just something a little bit different to look at. And these kind of stocks are, I mean, with a range like that, it's like, I don't know. I don't think there's anything that can really track it. But if you look at the order flow, look at the news, and look at the sentiment, that's probably what you got to go with.
Right. Sentiment is one of the biggest things I look at out there for anything. We were talking about that before you came on about vol. And etc.
So something for you guys to keep in mind. How these stocks can. You've seen a darling go from boom to bang, then hopefully back to boom now.
Well, yeah, there are some good trading rooms out there that, in Discord and stuff. I mean, we have a Discord one, but where it's more like commodity and futures traders, stock traders. But there's some out there that, so it's a little bit more serious, I guess. I don't know if that's the right word, but there's some really good rooms out there that have where they just follow 3 or 4 stocks. I mean, some of it gets accused of pumping and dumping. I don't think it's really that. I mean, that's more a Twitter thing, right? Or an Apple thing, perhaps. But yeah, you'll find a lot of these rooms pop up. So do your checking in the morning, and what's up, way up or way down, you could see some really good buys and shorts. And we're obviously, as you know, Alex and I are pretty contrarian, so you can guess which way we tend to go. But
one that's LLK, which I was really surprised about. Usually these stocks don't have shares available. So it told me this was low under the radar because I could get all the shares I wanted to short.
Yeah, you were mentioning that the other day.
That's a really good point.
It was not a lot of people were paying attention to this one. Now they got people's attention.
Well, yeah. And this time of year, a lot of desks have shut up shop. So you do get an opportunity that usually just goes to a big hedge fund or an investment bank, etc. So thanks for that, Madavi. So one thing that I wanted to mention that I just came on, I just got sent from UBS actually, and Citigroup. So if you trade commodities, the Aussie dollar, or pretty well anything risk on, iron ore is one of the main things, right? Particularly Australia and China. So you got your biggest buyer and biggest seller. So what I like, and we're talking about contrarian, is so I look at this time of year. You get every Tom, Dick, and Harry's putting out a prediction, right? So iron ore price forecast is one I just got sent. So if you're familiar with what went on there, China built all their cities. They pretty well bought it all from Australia, controls most of the world's iron ore. Then we got into a little bit of a trade spat. You're probably familiar with that. What's happened is it collapsed, but still at very good levels if you're Australian or Rio or BHP. But it started to motor up. And that actually led up the last 3 or 4 days in copper, oil, and commodities. So risk on. So it's not one you trade because you got to have such size. But you can trade the stocks off it. But what I'm saying is watch it for guidance going forward. What I noticed these guys predicting, they're all really bearish. So for those who traded, it's around 114 right now. Citigroup's looking for $96, UBS for 85, Capital Economics for 70. And so the SGX is actually around even higher, 126. These are US dollar prices. So from a contrarian point of view, these and analysts, we pretty well know everyone has a similar view on them. They're all calling that, by saying that, they're also calling for a massive recession, right? So if you're a bull, that's really good news, I would have thought. That's all from me, except actually one more thing. Just what we got coming out tomorrow is 2 Fed numbers, 2 favorite Feds. We got at 8:30 Eastern time. We got the PCE, and then at 10, I believe, is Dallas's PCE number. So they're 2 favorite Fed numbers, and there's a slew of other numbers, of course. Jobless claims out every Thursday, durables, the natural gas storage. Is there something else, Alex? I think there might.
We've got University of Michigan consumer sentiment and inflation expectations. That's going to be pretty important for those that are listening in. We got core PCE quarter over quarter, year over year today with the GDP data. Tomorrow we're getting the month over month, which is expected to come in at 0.4. So, if you're watching this number, you don't want it to come in too hot, because if it does, the Fed's, certainly not going to be taking their foot off the brakes in terms of their deceleration of QE and looking at, increasing their potential for pulling forward their rate hiking cycle as they discussed in December. So, a slew of macro and an otherwise quiet day and week. So it could move the markets if there's anything that's too unexpected, something to keep an eye on. Volume levels have been pretty low here. So anyone that's trading, obviously we want to look at technical analysis, but remember, because this is such a light week with lower liquidity, senior traders off the desks, a lot of the managers out of town, so you got juniors and bots basically running everything. That means moves can be exaggerated. And we're also in the wake of expiration, which can have a similar effect. On the other side of it, you have a little bit of dampening because we're in positive gamma territory. So you basically have flows, passive flows from all those put hedges on the indices that tend to sell rips and buy dips, especially kind of in mid-morning in the U.S. market and overnight. So things to keep an eye on. But I hope everyone's had a good week trading so far, or if you're investing, I hope that your portfolio is going the right direction for you as you head towards the holidays to spend some time with your family. And if you are trading this market, there's no shame in taking time off, to refresh, because this is not exactly the kind of market that we're typically trading on more liquid times of the year.
Yeah, enjoy your families, enjoy your friends. Good time of year, and just let yourself recharge. And you saw with Madavi, some of these moves are pretty wild right now. So he's able to take advantage of it. I saw, and I mentioned at the top there, that Vol just completely collapsed. And that's a lot what Alex was saying about all those puts coming off. It's also, if I'm a fund and I have a lot of positions, this is a good time for a Vol seller. That was the other reason you saw that, meaning it's not just Christmas, you then got New Year straight after it. So that's a lot of premium they want to capture. And you've got that factor in the market as well. And just on those numbers tomorrow, part of the reason we saw the curve shift in the Treasury market was there's a feeling that the Fed aren't going to be as aggressive, as you maybe even slow the taper, but on rates more specifically, because of Omicron. And, there seems to be an agenda, as we know, in a lot of what comes out with the powers that be. So And all we're hearing about is that. So if it did change towards inflation, like higher, I mean, we've already got, what, 7%, 8%, depends what you look at. That could do, as what Alex said, shift the curve back, which would then send the algos going, and it's a thin market. So we know where we
Doesn't
are
take
on the
much.
charts, so you know where to sit with that. So I'm just trading really liquid things right now, and barely at all, really. It's, if you got a family and stuff, you're pretty well doing all the things you forgot to do for Christmas. So I'll put my hand up to that. So, well, thank you everyone for joining us, and thank you Madavi and Johnny and Alex. Follow us on the socials; that'd be appreciated, and we'll try and get back to you when we can. If you got questions and things, Traders.com, markets for
Mayhem for markets.
I always get that upside down. No.
I
Too
said
much
it myself.
And then if you're specifically for technical analysis about NovaWave, just go to NovaWave. At NovaWave, Madavi's Madavi4, and Johnny is Meta Johnny, I believe. So, and of course, visit us at traderscommunity.com. There is a forum there that a number of people who refuse to get on social media, probably a wise decision, really, right? Spend their time there. So we will see you in the morning. We're winding down for Christmas. If everyone have a great Christmas. If you follow that, partake in that. If not, have great holidays and enjoy. I hope you liked it. Thank you. Good night. Thank you, everyone.
Thank you, everyone.